Hi, Nathan Zarowski here from Lending Max Mortgage. I imagine many people have heard about the recent changes announced actually yesterday by the Minister of Finance regarding mortgage lending rules. There were four changes made. I'll touch on them all briefly. Number one, $1 million plus mortgages will not be insurable. That doesn't really apply too much to my market. There's very few homes in the $1 million range. 80% loan to value on refinances, that's down from 85%. Not a huge change, and for the most part, most people don't refinance over 80% anyway, so I don't think that's going to affect us too much. Debt servicing ratios have changed a little bit. In the grand scheme of things, I don't think it's going to change much for us either in my market, anyways. And also, finally, the 30-year amortization has been reduced to 25-year amortization on insured mortgage products. And I think that will have the biggest effect on us, especially first-time home buyers who like to stretch out the amortization a little bit longer while they get used to having the payments that are associated with having your first home, all the bills that you don't necessarily have if you live with your parents or you're renting. So all in all, four changes. I would say the debt servicing and the amortization maybe will have the biggest effect for my market, which is Prince George and surrounding areas, so northern BC basically. The changes I think are mostly directed towards the hot markets such as Toronto and Vancouver, even though Vancouver is now starting to cool a little bit as well. So grand scheme of things, not a big deal for my market, but we don't know what the trickle down effect will be. Stay tuned for more updates. If you have any questions, give me a call. Nathan Zarowski at Lending Max Mortgage, 563-6775.